So good morning, good afternoon, good evening, everyone, from wherever you are calling in around the world. Thank you for joining our first of our Meet the Experts webinar series today. We're going to talk about compliance workflows, data analytics, and reputational risk data. A great set of panelists lined up here for you all today with some great in-depth experience acquired both from in-house within corporations as well as from service providers. Before we really start, though, I want to kind of thank our sponsor here, Lextegrity, pulling this together. Without them, we wouldn't really actually have this webinar here today, so thank you to them. We'll be hearing from them later on during this session as well. So before we actually begin, let's start a little bit of housekeeping. So we can go to the next slide, please. For those of you who've been on this webinar series before, you know some of these rules here, but first and foremost, we will be recording this. So if you missed some of it, if you have to jump off early, we will be sending out the recording afterwards so that you can watch it at your convenience. In addition, we'll also be sending out the slide deck from today's session. So don't worry about that. It'll be coming up to the email that you use to sign up for this event. Now, usually you'll be sending it out within a day at the latest, so you will receive that. Now, if any time you have any kind of technical audio challenges, maybe there's a lag in the video or there's a lag in the audio, we suggest actually just refreshing your browser. 9 times out of 10, that actually fixes the problem and you shouldn't have any more issues. And it's much faster than signing out of the webinar and then trying to come back in. So just refresh your browser and it should take care of anything. Hopefully, of course, you don't have any issues though. Now, from an interaction perspective, there you'll see 4 tabs on the right of your screen. Anytime you want to today, go ahead and hit that questions tab, submit questions to our panelists, and we'll try and answer. We have a dedicated Q&A session at the end of here today, but there are several hundred people joining this webinar from across the globe, so we may not get to every single question. We only have an hour allotted today, but we'll do our best to answer those. But go ahead and submit those questions at any time. You don't have to actually wait till the end of the session. If you're also more curious to hear more about our solutions we talk about today, go ahead and hit the Contact Us tab, and you can then fill out the form there, and the appropriate individual will then reach out to you to either answer your question or provide more information. So with that in mind, let's go on to the next slide, please. All right, so here you see our wonderful panelists today. As I said, my name is Dan Hartnett. I am the director of our third-party risk management and kind of oversight program here in LSEG, which used to be called Refinitiv up until late last year. And I'll be more moderating the panel today, and I have one slide I'll be talking to, but it's really the experts, the other 3 individuals who are joining us that really have the insights that you want to hear. So first among them is Mauricio Almar, right? He's coming to us from Halliburton, Senior Director for Global Compliance and Investigations. We also have Parth Chandra, who's joining us from Lextegrity, the CEO over there. Again, thanks again, Parth, for joining us and helping us to put this together. And last but not least, we have Vicki Lane joining us from Pilgrim's Pride, Head of Ethics and Compliance. Now, each of the bios for these 3 individuals you can see more about in the tab about the speakers. We can see a lot more about their experience and insights they have that they're going to share today. All right, next one, please. The agenda. So we're going to talk about 3 main topics here, right? We're going to start off with a kind of quick little overview to kind of set the scene, what's best in class from a third-party risk management perspective. I'll take a stab at that. Parth then will jump in and talk about the enforcement agency expectations, kind of give a little background from a regulatory angle there. And then finally, Vicki and Mauricio will then talk about their experiences at their individual firms and what they've seen and done to kind of overcome some of these challenges. Then we'll conclude with a Q&A session, as I mentioned earlier. Now, before we actually get into the meat and hearts of our presentations today, let's start off with a poll question, if you don't mind. A very simple one. You won't be graded on this. There's no exam or anything like that, but it helps to kind of just get us thinking about some of our topics. So if we can push out the poll to them, and I will read it off in the meantime. There's a little lag sometimes, about 10 to 30 seconds. But the poll should start showing in your screen. Go ahead and fill out the questions while I read it. So the question is, which of the following is an area of an improvement in your third-party risk management journey? Right? Is it number 1, automating onboarding and approval workflows? Number 2, consolidating multiple risk areas into one process? 3, integrating workflows with other systems such as contracting, procurement, or what else systems you may have out there? Is it 4, automating reputational data review or monitoring? 5, using analytics to analyze third-party financial transactions? Or 6, none of the above or something different, right? So the question of the flow in here, we'll give it about another 30 seconds for everyone to kind of cue in what they feel their area of improvement needs to be. And then we'll show the responses to the whole thing. And this will help to actually inform our presenters on what they should highlight or double tap on as they go forward from here. We're getting a couple of responses flowing in. We'll give it a couple of seconds. Again, that question really was, which of the following is an area of improvement in your third-party risk management journey? All right, we're seeing we got a couple, it's kind of almost an even split on some of them here. Go ahead and start to show the results, so if you will, and we'll talk there for 1 second here. So the results are coming across here. Looks like for right now, at least, the lead one for about 25% is consolidating multiple risk areas into one process, which is definitely an area of challenge. We've seen it from some of my clients as well, talking about how they go about doing that, and what once previously siloed information areas from a risk management perspective. So it seems to be the one. Oh, it looks like it's breaking away at about 25% still. So the two of the top ones then were automating onboarding and approval workflows. Always a problem, right? When we were trying to do more with less and faster and cheaper, right? And then also integrating workflows into other systems, which is going to be a huge technical problem depending on how complex your systems or workflow processes might be. All right, so great. So thank you for all that. We'll use that to inform our presentations going forward. But let's jump into our first actual substance slide, please. All right, so talking about for the end-to-end third-party risk management life cycle, right? The whole process from cradle to grave, as I like to say. I think there's kind of 4 key points here that I want to highlight that are almost nested within this 4-phase life cycle. The first one is you could have the greatest third-party risk management process in the world and all the steps you need to have and all the accountable people and approvals going on. But if you don't know who all your third parties are, it will fail. And that's a really key point is you have to know who your third parties are. You have to know that ecosystem and have, across the enterprise. Otherwise, if you only know who 50% of your third parties are, you're going to be opening yourself up to a lot of risk, right? It's equivalent of, driving down the highway blind, right? You just really need to know what you're going to see. Otherwise, the process won't work, right? That's number 1 point I want to highlight. The second one is, and particularly get into phase number 2 over here, have a risk-based approach, right? We've seen time and time again the regulators come out and clarify that you must take a risk-based approach because one size does not fit all from a third-party risk management perspective. There are not enough resources to go around. And what you end up doing then is squandering too much, resources on your lower risk third parties, and then not spending enough time, attention, or money focusing on those higher risk relationships, right? So you do not want that, one size fit all approach. A third point I point out is, when we get into the monitoring renewal. Monitoring is continually a challenge for a lot of the clients that I talk to, for example, because they don't know when to do it, how often to do it, at what level, in depth and focus do they need to monitor on. But monitoring is critical, right? Risk does not stand still. Once you onboard a third party, new information come to light, new problems can emerge. So you have to be constantly at top of that, right? You don't want to be reading about it in the front page of a newspaper when there's a problem with one of your suppliers, for example, right? There's also a problem of when you renew, right? Should you renew every year? Should you renew the process every 2, 3, 4 years? But you should have some kind of renewal mechanism in place, right? And then finally, I think it's really important that you want to know, how do you go about managing all of these? If we're talking about having all of your third parties accountable for this process, you have to have some kind of centralized workflow system, right? You can't live off an Excel file anymore, particularly if you have hundreds, if not even thousands of third parties you're trying to manage across a globally dispersed footprint, right? You have to have something to kind of help you centralize it so you can keep track of who's being onboarded, where they are in the process, are they being offboarded, and why are they being offboarded? But doing that in an Excel file is just not the way of being able to do that. Too much human error, too much loss of knowledge, institutional knowledge if people leave, right? So those are kind of 4 points I would highlight there from the end-to-end, third-party risk management process. At that point, let's go to the next slide, and Parth, I'm going to turn over to you to talk about more kind of the enforcement expectations, please.
No, thank you, Dan. I've been in this space, in the risk and compliance space, for 20 years, first starting as a white-collar litigator, then going in-house, and then now being at a technology company that's had our technology in front of the regulators. And I think what we've seen with the enforcement agencies is that their expectations have evolved over the last 20 years for sure, but they really have mirrored what Dan just presented in the view of best in class. So, for example, the U.S. Department of Justice, they included this quote in their evaluation of corporate compliance programs. Does the company engage in risk management of third parties throughout the lifespan of the relationship? And the emphasis on the word lifespan here. And that's exactly what kind of Dan covered in the previous slide. So we've included a couple of other quotes from that guidance here that fleshes out that life cycle risk management. But just to summarize the quotes, I'm not going to read those, but as the previous slide showed, it starts with that substantive review of the need for the third party. Because you have potentially have a very large vendor, supplier, distributor base, and do you need that next one on top of it? Because every third party does add some risk. Documenting that review, documenting the red flags, and importantly, documenting the mitigation and completion of the mitigation related to those red flags. That continues into integrating that diligence into your company's other systems, your procurement systems, your vendor and customer management systems. And then finally, the DOJ at least talking here about, in the last quote, about looking at financial data to ensure that payments are appropriate given the scope of the work that was done by the third party. So meaning, look out for anomalies in your financial data that could indicate non-compliance that happens after the due diligence is done. So whether it's potentially not a legitimate third party or a legitimate third party not behaving in a legitimate way, looking at your financial data to find that. So that's really all Dan and I wanted to provide, just a brief overview of what best in class today is and what the enforcement agencies have said publicly about their expectations. And we really wanted to focus the remainder of this session today, this expert session, on two very concrete case studies from Halliburton and Pilgrim's Pride on their journeys around end-to-end third-party risk management. So I'm going to turn it over to Mauricio to kick those case studies off, and maybe we could turn it over to the next slide, and over to you, Mauricio.
Perfect. So I think Vicky and I will sort of go back and forth on kind of the various different stages in evaluating our existing programs and enhancements, improvements within those programs. So at Halliburton, we have had a third-party due diligence program for many, many years, as you would expect, certainly within our industry, certainly with the risks in the work that we do. But we came to a head a couple of years ago and had to evaluate whether the way that we were doing third-party due diligence answered two goals, right? Was it effective and was it efficient? I think it was certainly effective. I think many internally would argue it wasn't efficient. So how did we go about evaluating how to resolve those two concerns or those two issues? So at Halliburton, we have a concept that we deploy with our customers all the time, which is listen and respond, our external customers. So we did that same exercise internally. And this is something I want to emphasize. When you, as a compliance professional, as a compliance lawyer, as someone in the law department or any other part of the organization that's involved in internal controls, it's absolutely critical that you understand what your organization feels are the pain points in whatever process you might deploy. Because you can design the best control system ever built, and if you don't have that internal buy-in from the stakeholders, if you don't have the internal buy-in from the users of the system, you're going to have challenges with whatever you deploy. So that's where we started our conversation. And we had both what do the internal control stakeholders want and need, and what do the users of the system need? And those are sort of the first two items on the far left of the slide, right? Let's enhance the internal controls, but then also increase the speed and make it an easier process. So some of the things that we identified, and some of these you may have thought of, some of them you may have not. 6 things. Mobile accessibility. And I know that may sound as far removed as you're probably thinking from an internal controls design perspective. But think about how you operate on a day-to-day basis. Think about how your business leaders operate on a day-to-day basis. They're likely, although maybe, but likely not lugging around their laptop everywhere they go, right? But they're interacting with vendors, they're interacting with customers, they're interacting with regulators, with government officials, doing their business with their mobile device. So if they need to quickly access a system to request approval for something, to evaluate a third party, to identify, can this third party help me in this? Make that mobile accessible. And we put a lot of time and effort into developing a system that did that for our internal users. Visibility throughout the process and for all stakeholders. Oftentimes, you find systems that are really good, processes that are really good for the owners of the process. Me, law department. I can see my whole list of state interacting vendors, for example. But what good does that do if the person that's in the field that needs someone to help get a license or a permit or something else doesn't know who they can use? Right now, they're asking a bunch of questions. They're going to different sources. We made that accessible for everybody in a user-friendly system. Real-time access to all employees, an integrated screening resolution. This is another point I can't emphasize enough, particularly as a user that's going through the due diligence process. If you have to go to multiple different systems, it takes longer. It's more painful. It's more arduous. So anything that allows you to be able to put it into one unified system was what we wanted to do. And then the last two kind of relate to the first one, the enhanced workflow automation and the administration of the process. And what I'll say here, and then I know that we'll continue talking about this, is we, at least, our journey included really taking a look at what kinds of questions were we asking in the process? Were they the right questions? What kinds of data, what type of data were we acquiring? And could we use that data to actually find independent information that helped us assess whether a third party presented a risk or not? And who was involved in the process from either a review or approval perspective? I think those are things that as programs mature, as organizations mature, as your risk profile changes, as your industry adopts, as your footprint evolves, those are things that you should constantly be looking at. And that was part of our sort of improvement goals when we were going through this process. So, Vicki?
Thank you, Mauricio. So we had a similar origin story. So we certainly had a third-party, screening and management tool that we were using. It was effective. It was not efficient. Same thing. So we really wanted to enhance our third-party risk management program to leverage a much higher level of automation and kind of a one-stop shop, not only with respect to the screening aspect, but we were really interested in having like the full our workflows around not only third-party due diligence and vetting, but also disclosures and approvals, and then ultimately transaction monitoring. We wanted to have everything in one place. Because I'm sure, it's similar with all of you, we have systems that we've built, but they're very siloed. So it's very difficult to kind of get the full picture, your full risk profile. And like Mauricio, we wanted to do this in a way, have a platform that was easy to use for our business and efficient, importantly efficient. We don't want to slow down the process. And actually what we found is, now that we've fully implemented this, it is a far more efficient process. We've gotten very positive feedback from the business. So as I said, we had two other objectives in addition to what Mauricio spoke about, and those are on the right-hand side of the slide. We wanted to enhance our disclosures and approval process. Things like disclosing gifts, meals, entertainment, donations, conflict of interest disclosures. We wanted to make sure that we had that all in one place, that information. And we wanted to use one tool across all of these compliance functions. This benefits the compliance team, of course, because we just go to one location and we can kind of visually see trends. But it also is easier too for the business people. They go to one tool for all of these different functions. And finally, we recognize that risk management doesn't end necessarily with your initial due diligence. We wanted a system in which we could identify through our questionnaires that Mauricio mentioned, and also the results of our screening. Who are our higher risk vendors, And it allows us to not only do an initial screening of them against sanctions list, et cetera, but also to continuously monitor. So if we have a vendor that, was not on a sanctions list yesterday, we would get a notification that, the next day that this entity appeared on it. So that was very important for us too. And the final piece of this for us was transaction monitoring. We wanted to make sure that we were reviewing the third-party, financial transactions to vendors as well as customers, distributor transactions to really advance analytics to look for outliers. So, this transaction monitoring and detection, is just another tool in our toolkit, in addition to our hotline and our audits to really kind of identify risks as they emerge and to be able to respond in a timely manner. So I think the next slide, Mauricio, I'll hand it back to you.
So how did we go about doing this? So I mentioned a couple of items, and this is something that I certainly encourage you to look at when you think about end-to-end third-party management, which is and my running comment, to not call it a joke, but my running comment with the business is, I can tell you on March 5th that this vendor seems to be a vendor we can work with based on our due diligence. I don't have a clue whether on March 6th that statement is still accurate. So I need tools, you need tools in order to be able to continue evaluating that. And one of the things over my practice that I've identified is we often ask a lot of questions. We ask for a lot of information. My favorite question of all time is to a third party, do you engage in corruption? If you ask that question and you ever got a yes response, I'm amazed. So we really, I don't want to say went back to basics, but we really took a hard look at our questionnaires to identify not just the questions we were asking, but what data were we getting out of those questions that then we could deploy for immediate due diligence and then longer term risk mitigation monitoring of that third party, right? Both from a transactional perspective, a reputational perspective, Vicky mentioned sanctions, anything else. So, there are your basics such as ownerships and address and things of that nature, but depending on your business, your location, your risk touch points, there are questions that you can ask both internally and externally that's going to give you relevant data that you can continue to pressure test throughout the life cycle of that relationship. So that's something that we really, really focused on. And at least our experience, and I suspect yours too, will be that your encyclopedia questionnaires will go down to a far more reasonable set of questions, which does two things in addition to getting relevant information. Makes your internal stakeholder a lot happier. It makes the third party that you're working with more likely to respond in a fulsome manner to a smaller set of questions, right? So you have to think about the psychology in the process of going through kind of that initial gathering of information phase. The second part of the process was to ensure that we had a technology that could deploy all sorts of different workflow automation, that it was dynamic based on location, responses to questions, however you risk tier your program. This has already been said today. There is no one size fits solution for any type of vendor review. I'll even advocate, and hopefully, and certainly we do, every vendor, every third party, customer vendor, et cetera, that touches Halliburton is getting some level of due diligence. They're not all starting with me or my team. They may end up with me or my team, right? I think you have to think through that as well. But everybody's getting some level of touch point. But then how do you branch that? How do you automate that? How do you make it efficient? Email is not the way to do it. Excel spreadsheets are not the way to do it. And you will find, again, and I'm going to focus on this part of it because I know Vicky's touching on some other things. So I want to contribute the absolute criticality of the buy-in from the business on the process. So if your workflows are efficient and easy, if people are getting notified via email or whatever it might be, pings, think about the actual automation of how you do this, right? Not just the substantive part of it, but how are you getting people engaged? The easier it is, the more efficient it is, the faster things will move, which just buys into the program. And you're doing all of the things that you need to do to get that data and the analytics to advise the business appropriately on the risks associated with it. And then we wanted to ensure, and did, that we had a management tool that was simple to manage for our team. And this is something that, at least for us, was really important. When you're thinking about budget allocation for a project like this, whether it be a new tool or an enhancement to a tool, think about who's going to be managing that and who's going to be using that, and what do you actually need and what information do you want and what's going to be valuable to you. And that's how you built it, right? Not you need absolutely everything under the sun in the most complex system in the world. If that's what you're capable to handle and that's what you want, excellent, awesome. That's what you should get. If you want something that's more tailored to your needs, your interest, your capabilities, what you're looking for, ease of automation, ease of utility, I can't overemphasize enough on those factors. So Vicky, with that, I keep going for another 2 hours. I'm going to stop and let you jump in.
Okay, thank you. So our experience has been, very similar to Halliburton's. We were able to fully automate the onboarding process. I agree with everything you said in terms of really need to engage your internal stakeholders, right? You're going to change an entire workflow, which was the case for us anyway. Involve early, your procurement teams, your vendor management teams, get their buy-in and feedback as you go along. We involved them in testing the system before we went live and really got really positive feedback from them. It is also a great opportunity to look at your questionnaires and really figure out, what information do I need from the business in terms of the business rationale? What information do I need, absolutely need from the vendor? So I think it's really made the process far more efficient. The benefits are not only for compliance, but for the business as well. As I said, we've actually, my only concern with this process, and whenever you change a workflow, is, adding more time, right? The business needs answers, quite quickly. And we have pleasantly found that it has not slowed down the process at all. If anything, it's far more efficient. Okay, so next slide, please. Okay, so in the process, in our workflow of onboarding, we ask questions of our the internal business person who wants to engage the vendor. We ask questions of the vendor. That alone is not enough. As Mauricio pointed out, they're not going to tell you necessarily that they've had problems in the past. So the third piece of that is the screening. And so we chose LSEG. It was Refinitiv when we chose it. We really liked the fact that it integrated, well, both all of the sources of information that were being gathered, and also that it integrated really seamlessly with the Lextegrity platform. So we don't have to go to two different locations. The entire workflow is through Lextegrity. So, through the screening, we're able to look at, things as sanctions, watch lists, information on politically exposed persons, state-owned entities, and adverse media. So we're really able to capture within this screening, a full risk profile. As I mentioned, this is done in an automated way. And so when a new vendor goes through our onboarding process, it's screened. We're able to use our questionnaires to identify whether we need an additional level of due diligence on a vendor because we view them as higher risk. And the nice thing about this also is from an audit perspective, our entire workflow is there. All the evidence of the work that we've done, the analysis that we've undertaken with a given vendor, any remedial things that we want to implement. That's all stored within the Lextegrity platform. As I mentioned before, we also are able to continuously screen certain of our vendors. We've taken a risk-based approach. Not every vendor is the same, poses the same risk profile. So it's allowed us to do that. It's definitely become more, effective and efficient. And then we're able to, by having the three systems together, or the three functions together, if we see a vendor that we consider higher risk, we can then more closely monitor transactions with that vendor as well. Dan, is there anything you'd like to add from LSCG's perspective in terms of screening and?
No, just to say that I did not pay you to say those comments earlier and
No, he did
everything.
not.
So thanks, Vicky, for mentioning that. I think this is the way of the future, though, in many ways, where we bring our world-class data in there. You have a partner like Lextegrity, right, where you can get at the client's concerns or pain points, and that is the way you have to approach this in many ways, right? We're trying to improve the efficiency, making things easier, faster. You do not want to be seen as inhibiting the business. These are concerns we're hearing constantly from our clients that, how do we prevent ourselves from being put in that position where we're holding up business deals being done, for example, because the process is too slow, it's too cumbersome. We don't have enough resource to work through it. So this kind of almost, symbiotic relationship here of going forward from a partnership perspective, and then getting that data in a efficient workflow over to clients. That's really, I think, the way it has to be done. So I couldn't have summarized it better, Vicky. Thank you.
Yeah, and excuse me, I'll add a couple of points here. Again, back on sort of the internal stakeholder, and Vicky mentioned this. One of the challenges oftentimes with workflows is that they are they go in one direction. I'm blanking on the terminology right now. And by that, what I mean is once you're done with the due diligence exercise, you're kind of done with the due diligence exercise, right? But that relationship isn't over with. And with the system that we have, and we also use both LECG and Lextegrity, and the integration between the two is fantastic and part of the ease of use. Dan, I'll preempt you. Dan did not pay me to say that either, and neither did Parth. But we're able to go back into the system, right? And if we do risk mitigation on a third party, right, we decide, okay, we're going to approve this third party, but there were some issues we identified during the due diligence, right? Perhaps an ownership relationship that's closely tied to a government connection that at the moment doesn't appear to present a risk profile, but we don't want to wait a year or two or whatever the renewal cycle might be on that. We want to deal with that sooner and earlier. So we're able to, within the system, set that up, right? And have risk mitigation strategies that are communicated to us as well as the internal stakeholders, the business. We can put whatever timelines, timeframes we want on it, do whatever we need to do from a substantive analysis associated with it, and put it all right back into the same system. We're also able, we have a very close connection with our internal audit function. They, as part of their internal audits, are regularly looking at third-party relationships that are going through our diligence process. We're able to provide them immediate information on approvals, status of diligence, red flags that were identified, in very digestible pieces of data, pieces of information that they then can use as part of their own auditing. Within our own compliance program, we do auditing of these activities plus business hospitality and what we call social commitments or charitable contributions, things of that nature, all integrated within one tool. I can't overemphasize how helpful it is to have everything within one tool, both for us as users of managing it and for the internal stakeholder that gets confused if there are multiple things that they have to learn. I do. So all being within one. But we can provide regular information and data that's not just compliance focused. And again, when you're thinking about the internal stakeholder, if you give them a data sheet on you spent X amount of money on business hospitality over the last quarter, that's relevant to them, right? And they may look at that, perhaps not from your perspective of, okay, well, this activity was fine because legal reviewed it, we went through the process, I'm not concerned from a compliance perspective, but I might have some commercial concerns, and they'll talk to their business, and that may alternate the spend on it, right? Sometimes you have to think through, when you put in a process, there are tangential or superficial, not superficial, but parallel impacts to it that you're collecting data that's relevant to those other stakeholders for your purposes as well as their purposes, and they will deploy it for reasons that help everybody within the organization. So, I wanted to focus on that. One other point that I didn't address beforehand that I did want to touch on is when we went through this exercise, we focused very heavily on accountability within the process. Every single third party has what we call an internal business sponsor, or for our highest risk third parties, relationship managers that do a significant amount of ongoing monitoring work. But there is somebody within the business or another support function that owns that relationship, right? And they are the ones that are driving this due diligence. And we found, and I think you would find, that if this is just some process that the lawyers are having to deal with or the compliance department is having to deal with, but it's not impacting my day-to-day, you get some level of buy-in. When they own it and they can't move, they can't pass go, they can't collect $200, they're stuck at Broadway or Boardwalk, they'll get engaged, right? Because it is a critical matter for them. And at least in our case, we used to have the law department go first and the business go second in terms of kind of approvals. We flipped that on its head. That's been very successful. It also has led to relationships not even needing due diligence, because the business decides at various levels through the structure, this is not a commercial relationship that we want to engage in. This is not a vendor that we need because we have these other vendors that do the same work. So again, another way to make your process more efficient with more decision makers that are involved, and that I don't want to say the onus, because it's not the onus, but the responsibility lays on that individual, that group, that department, that location, that geography that wants or needs that commercial relationship. That's been a key win for us through this process.
And I would just add, Mauricio, to some of those points and the points that you raised, Vicky, breaking down these silos of processes and stakeholders obviously makes your process more efficient and also effective from a risk management perspective, because everyone's looking at the information together as opposed to each looking at it in a separate system through a separate process on a separate timeline. There's also real opportunities to integrate multiple risk areas as well. And I know in the survey about 20% of folks, I think, said that looking at multiple risk domains or risk areas is of interest. That's a clear area to win, where you can bring in other stakeholders. It's great for your external stakeholders and the third parties to not get hit with 4 different due diligence processes coming from the same organization. It makes your company look externally more organized, but it also, from a risk management perspective, allows you to look at ethics and compliance risks side by side with labor and human rights diligence, sustainability. And obviously the expectations are increasing. The vectors of risk for organizations are increasing dramatically. And that's where you could combine a smart workflow tool that can send different questionnaires, can risk score those different risk areas differently, as well as using LSEG's data, which has all sorts of risk domains beyond just the core ethics and compliance risks. Kind of marrying those two things together is another really big opportunity that we've seen a lot of companies leverage. Obviously, there's change management there. If you're dealing with an embedded process that's been years in the making of breaking that apart, so you may want to phase that in, but it's having that goal in mind is a real nice way to get more buy-in within the organization. Maybe turn it back to you, Mauricio, I think.
So I think we can, I think Vicky had touched on the integration as well as the ongoing reputational searches that are fully embedded in the system. We certainly deploy that as well. So we can move to the next slide. So this is one that I think may be particular to Halliburton, but I wanted to share this with you, both from a substantive perspective, but also from a technology perspective on how we do it. So, you know, as with any risk tiered program, we have a tier that is our highest risk third party interactions agents. As you might expect. And the ongoing monitoring for agents is highly highly monitored, highly process driven, and I want to focus on a couple of things. The first one is, and I don't want to discount all of the benefits and the need for technology. It has made our process significantly more efficient. It took our efficacy. Our program was already effective. It took it to a new level of efficacy. But there still is the human element in the process, right? And this is sort of what the contact report process for us is. So with our third parties, as you would expect, there's financial transaction monitoring, right? There's renewals. We have what's called an agent review committee of executives that reviews our commercial agent relationships. But we require all interactions with our commercial agents to be documented, whether that be a sit-down meeting, whether that be an interaction with a customer, whether that be email correspondence or whatever it might be. And the rationale behind that is sort of twofold. If you're not having contact with an agent, why do we need the agent? Or are you not effectively doing your job of being engaged with the commercial agent to ensure that they're engaged in their business consistent with our code of business conduct, our anti-corruption policies, et cetera? So it goes back to that comment of, you know, on the day that the agent or the third party is approved is the day that I put my kind of seal of approval, if we want to call it that, on it. But there needs to be ongoing monitoring with that relationship, right? People at those third parties change, environments change, et cetera. So it's very simple. If you're not having contact with the agent, we've got questions, right? And this contact report process allows us to ask those questions because there's nothing coming in. The reverse of that is, right, we're super engaged with this individual, and this is what they're doing with us. This is the benefit that they're bringing to the organization. This is why we're engaging with this third party. That helps both the compliance department. It allows us to review these contact reports and evaluate on an ongoing basis. Okay, there continues to be a business rationale for this relationship, and the activities that are being engaged with, whether they're supporting one product service line or another product service line, et cetera, are consistent with what we were told when we went through the approval process. So it kind of gives you that ongoing monitoring ability. It also helps, and again, going back to the internal stakeholder, it helps senior management that's incorporated on these contact reports to know what's going on, right? And for them to be monitoring from both a compliance as well as a commercial perspective. So I just wanted to give a little bit of that background for the kind of substance of why we do this. Now, pre our current platform, this was done via it was done not via email, but via email on an Outlook form. If you've ever tried to use an Outlook form on a mobile device, good luck. I don't actually think, maybe it's possible now. It was inefficient, right? It was effective. People were doing it. We were able to monitor all of the substantive reasons we want to do it, but boy, people didn't like it. Now, you know, they have a meeting and they just grab their cell phone, they log in, answer 3, 4, whatever questions it is, and before they've even left the building, they've submitted this and they're done, right? So it's real time. It's right in their head when they're doing it. They're not trying to remember it a week later. So it made it more efficient for them, and it made the input better for us. So I know I kind of went a little bit more in depth on that process. I haven't spoken to other companies that do something similar, so I thought I would share it. It really works for us, and it helps us add a bit more of that human element to the ongoing monitoring to supplement the technological risk analysis, the public data information, the transactional analysis. So that's been really effective for us as well.
Okay, next slide, please. So I won't spend a lot of time on, no, back one, please. I won't spend a lot of time on this. I touched upon this before. We were looking for a solution that we could really combine our workflows and have greater visibility into really all the components of our compliance program. So, I think like most companies, we were working in silos. We had our conflict of interest disclosures, for example. We automated the best we could with fillable PDFs, but ultimately the data we got was in a spreadsheet you really can't do much with, and it's divorced from the SAP system, which is what we use. So we really wanted to be able to tie all the pieces together and actually be able to respond to the disclosures and approvals as well. So combining the workflows here, another example is, so we have approvals for making donations, we have approvals for gifts, meals, and entertainment. We can run our screening. We can now combine, those disclosures and approvals with screening, so that we're going to be making a donation to a charitable organization or some other organization. We can run a screen on them as well to understand, who we're, what the risk profile is with this third party. I think we're running short on time, so Parth and Dan, I thought maybe we'll just move it to the next slide and get into the last topic. Okay. So this is the piece that I'm most excited about. We've recently implemented it, and it's just been a game changer for us. So I recall a few years ago, I attended a conference in which Matt Galvin from the Department of Justice spoke, and I'm sure many of you know who he is. He's the DOJ Counsel for Compliance and Data Analytics. And I remember him saying, as compliance officers, you're responsible for knowing all of your company's data, which is a really big ask, right? So, we do our due diligence within the company to understand the different systems, but trying to detect an issue is like trying to find a needle in a haystack. So I really feel that with this tool now, we have a really good ongoing detection system. So Parth can get into the technical aspects of the data analytics we refer to as transaction monitoring. But this is basically where we can in real time monitor transactions from SAP, that's the vendor payments, as well as customer and distributor transactions. We set risk scoring on different criteria. And this is one of the things that I really have liked about the tool. It's very easy to adapt to your particular business, right? I mean, Halliburton's, risk profile is different than Pilgrim's. So we've been able to we monitor in real time. It pulls data from SAP on a daily basis. And then based on our risk scoring, we will be notified through an email or through the tool itself that there's a high-risk transaction that you should look at. And I also really like this tool because it's easy to change as it evolves, right? Your risks evolve over time. So for example, kind of getting back to the combining workflows, if we have a vendor that we think is high risk, as I mentioned before, we can then put that into a risk scoring within the transaction monitoring piece and more closely monitor those transactions. So before we implemented this tool, the best we could do was really auditing, right, of high risk, what we perceived as high risk transactions. But here we have visibility into every single transaction. So Parth, do you want to add a little bit about like the technical side of this and the transaction monitoring piece?
Yeah, no, sure. And I know you want to talk a little bit about the results of this as well for your team, but I'll jump in very quickly. I think here we tried to graphically represent what the approach in our tool is around aggregating risk scores here. There's two examples in the vendor spend, procure to pay domain, and the customer revenue, as Vicki mentioned, order to cash or distributor domain. And really the difference here between, a dashboard or a, one key risk indicator where you're looking at, a round dollar payment is you're aggregating multiple risk lenses simultaneously to aggregate a risk score for the transaction, increasing the likelihood that you're bubbling up to the surface those needles in a haystack, because otherwise you may get drowned out by a lot of false positives, a lot of issues, or if you're just visualizing your data, a lot of dots on a chart where you don't necessarily know which transaction of these thousand dots am I actually supposed to look at? It may not be the one all the way on the far right, which is the highest amount, but it may be a smaller amount spend item, but one that has many, many risk indicators related to it. So here, the example on the vendor payment on the left, you have one payment and it's hitting on 6 different risk indicators at once. Now you may be applying 20 different risk indicators to that payment, but 6 of them have hit, quote unquote, as higher risk. So you have a payment that's potentially to a duplicate vendor, and it looks like it might even be a duplicate invoice. It's also being paid very quickly. So, perhaps your company's payment terms are net 60 days, but this vendor is being paid in 2 days. So it's a really abnormal situation, maybe some sort of emergency payment that raises some risk. But it's that combined with the duplication, combined with a potential conflict of interest hit where potentially the vendor's address is matching 100% or a very high match level with an employee's address of the company. So it might be a sham vendor that's been created by an employee. So again, looking at all of these attributes together simultaneously at the same time really subjects each transaction to a very high level of scrutiny that no human would really be able to apply it to other than on a sample basis. But this is applying it to 100% of your transactions. And so if there's something wrong here, if there's potential non-compliance, your system, you can do all your documentation there. You can leverage the benefits of machine learning to get better over time. And you're not going to have a huge backlog of items to review. You're going to have a very targeted list. I'm not going to go through the example on the right. You'll get these slides and you can look at it. That's in the order to cash space, kind of looking at different patterns of sales to distributors that might indicate channel stuffing, inflating revenue, etc. But really, ultimately, I think what I wanted to share is just the firepower that you can really bring to your large data sets from your financial data. And maybe if you go to the next slide. I know Vicky has talked to some of this from a process perspective. It's bringing that SAP data or Oracle data or T&E data or whatever it is and bringing it into this analytics engine. The important thing that Vicky mentioned in terms of the configurability is this analytics engine is no code. So you can configure analytics as a lawyer, an accountant, as a compliance professional without needing to go to IT, without needing to do any SQL, et cetera. And then there's visualizations and things like that as well. And I don't know, maybe Vicky, I'll turn it over to the next slide, maybe for you to close it out. Oh, you might still be on mute, Vicky, sorry.
I will always do that, apparently. I will never stop. So this has really been an important, new tool for our compliance function. As I mentioned, it does give us visibility into real-time transactions and being able to respond in real time to any issues that we see. It's, as I said, this has helped us find that needle in a haystack, which there was really no other way for us to do it, given the volume of transactions we have. We're able to, escalate the highest risk transactions for review, quickly deal with any issues that arise. And it really has given our compliance team, a clearer view of our risks, beyond just our, risk assessments and, ERM, et cetera. And finally, as has been mentioned, IT resources are limited, I think, in any company, and having to go back to the vendor time and time again to make any changes can be costly and time consuming. So having a tool that is a no code, as Parth put it, and really allowing us to make changes as risks change has really been key for us. So I think that's all I had on that slide. Do we want to open up for questions, Dan, or?
Yeah, I think we do. We're actually right on time, to be honest with you, for a couple of questions.
Oh,
and as I mentioned earlier to any of the audience, if you want to go ahead and submit them, go ahead and put them in there now. We'll try and get back to you also afterwards, if we can. If we don't get to all the questions, we do have several hundred people on the call, so that's a little hard to do sometimes. But let's jump right into it. And the first one I have here is kind of going back to the more like the efficiency process, right? So if you both talked about, and this for Mauricio and Vicky actually, when you both talked about earlier on in the presentation today, about how you want to go out there and you had to improve the efficiency of your existing processes back then. The question comes in is that, how did you measure that? What does an improvement look like? What are the metrics you may have used as you can show that you actually did then improve upon the various processes that you had in place? So I'll start with Mauricio and then Vicky, please.
Yeah, I think the simplest way is we can measure time to completion for an individual review, right? So we can see that a business hospitality may have taken 5 days, 6 days in the past to approve, which is generally way too long. And you can measure it with the analytics in the system to be able to determine that it's being done significantly faster, right? And it has nothing to do with the substantive of the data; it has everything to do with the movement of the process. So being able to use the tools in the system to measure kind of start to finish is one of the metrics that we use. We also switched at that same time from procurement submitting all of the state interacting vendor requests to the specific business owner. So we can also measure the speed to which things even come into us by speaking to and evaluating where they are in the general vendor onboarding process and coming in. So we've been able to use those measurements. Some of it's feedback, but most of it is being able to just literally look at the time from start to finish within the process. That's for efficiency purposes. For substantive is different. Substantive value is different.
And it's really been the same for us. We look at the process time from end to end. And also I have found, probably everyone else on this call has as well, if the business finds it inefficient, you will hear about it. We have actually received very positive feedback from the business. It's a much clearer workflow. I feel more comfortable that that it's less manual. So I do feel like we're capturing everything. And so it's really the time to completion from start to finish is what we've looked at.
Great, thank you both. So I'll flip it this time around. Actually, Vicky, we'll start with you this time for the next question, which is looking more at the idea of resources. How did you, the perennial problem? How do you justify resources to the powers that be so they do open up the purse strings? Because everything costs a little bit of funding every once in a while, right? And so how do you justify the cost of a program, or if you're moving to a new system, right? Are there any kind of best practices or ideas there?
Yeah, I mean, I think it's really, important, obviously, to get buy-in from leadership. It started with explaining, what are the expectations, particularly around like data, data analytics, et cetera. Explaining the power of the tools and how it really will protect the company more efficiently and effectively. So certainly in year one, when you implement these tools, there's, significant startup costs. But then when we looked at all the other tools we were using, I did a comparison of the total spend, those more antiquated tools we were using versus this. And after year one, when it was implementation, it was pretty much the same amount of money, but way more efficient. So we actually had a pretty easy time here selling the value proposition to our business.
Yeah, so I'll give our experience and then just some general tidbits. We had the same value proposition at the end of the day when we looked at it from a cost perspective of the various tools we were doing into integrating into a singular tool. It wasn't a difficult conversation from a pure dollars perspective. I've been fortunate as well that I work in an organization that is highly supportive of what we do in the compliance department. That's not to say that they're not, asking the right questions on value and need and cost control. But there's an understanding within the organization of the value, both short-term, medium-term, and long-term, that these sorts of tools bring. And that's what I would say, just from a general comment perspective, is it's always, what is that value proposition to the organization, and how do you quantify the risk that you're seeking to mitigate in sort of the longer term, but also in the shorter term. And if you look at, I'll just use this as one example. if you look at the analytics transaction monitoring side of the house, just grab fraud. And if you look at how much fraud is ongoing, you can actually quantify, right? If you let this fraud continue for another 6 months, 9 months, a year and a half, whatever it is, you can oftentimes put a dollar figure on that. And then you look at the cost of the tool, and sometimes your tool may be worth it for just stopping one act of fraud, or certainly more acts of fraud. So you sort of have to understand the organization that you're in, where the risk points are, where the touch points are, what's happening. And that's your business case, right? Is that this tool will cost X hard dollars, but can save Y hard dollars in a short, medium term opportunity. But in addition, there are legal requirements, regulatory requirements, and we're guarding against a broader risk to the organization. That's the conversation that you're having. I know it sounds simplistic, and it's much harder than that. But it is that ongoing conversation of, this is what we need as an organization to be able to continue operating our business and mitigating the risk, so that we can continue to be effective in supporting our customers and our shareholders and all the stakeholders that are involved with the organization.
Great, thanks both of you. So I got a couple more questions here, but we're up at time, so I want to be cognizant of both our speakers' time as well as our audience's time. So we're going to wrap it up right here. I do want to say thank you, first and foremost, to Lextegrity for making this happen for an event. Thank you, Parth, to you and your team. It's been a pleasure having this. Definitely one of the panels where I actually learned. I take my own notes over here, so it's always a positive sign there, I think. Thank you both also to Vicky and Mauricio for helping out here and giving your insights and experience. We really appreciate that. It's great to hear kind of the inside voices rather than just the practitioners talking sometimes, right? And then thank you, obviously, to Open Exchange for hosting this and to our audience for attending. So we'll be sending out the recording and the slides shortly, so look for those in your inbox. And we wish you a great rest of your day going forward. Thank you again.